All right, what's up? Tim Sykes here. Weekend video lesson. So much to go over, so many plays. It's exciting. I'm also going to link this video that we just released with Jack Kellogg. This is part 4 of our Dubai series. Nearly 30 minutes. Really watch it because, again, it's not just about the money that you make in trading. It's the education you get from the money that you make in trading. And now that Jack is over, $12 million, yes, it's awesome that he's done that, but he's learned so much from the journey of getting to 12 million. And I was very fortunate to get him on camera for several hours when we were in Dubai. And we just talked about his whole journey, learn from his success, learn from his failures, learn his mindset and his whole perspective. This is how I keep creating millionaires from scratch. It's not just because of hot picks. First of all, you should never follow anybody's picks or alerts. Learn why they're trading that stock. Why are they entering? Why are they exiting? Why are they betting bigger? Why are they betting smaller? And then how do you apply that why to your own process? But it really is a common theme with all my millionaire students and their mindset and their, work ethic. I get so many messages from people where they're like, they'll never get to 12 million, 10 million, 5 million, 2 million, even 1 million. Even though they're working hard in the wrong sectors, the wrong jobs. You can be an Uber driver. There's not enough time in the day to make a lot of money. Maybe unless you pool 100 Ubers together and you're a manager, but individual hourly paying jobs, really, really difficult. And we're all losing time. So I want you to really maximize your time. And I think that learning from interviews like this with Jack and my other millionaire students, hopefully you can optimize your time. We all have so much opportunity, especially now that the market has heated up. So I'll include a link, or maybe I'll just embed this video. It's nearly 30 minutes, really good watch. Also watch parts 1 through 3. I'll link those. But it's 2 hours of Jack Kellogg and his mindset. And I think after you watch all of that, you'll really understand better. Also, I got to do a whole, video on this. This is a new Business Insider feature on me. They looked at my accounts. They picked 2020, 2021, 2022. That's when I made 630% in 3 years. People think that my best year was 99 and 2000. They're like, you haven't done anything lately. My 2 best trading years were 2020 and 2021. In 2022, I did a good job just staying green when the average trading account lost 44%. So I share the patterns. I got to dig into this whole article. I don't have time right now as I'm making this video, but I'll do it this week. I'll link the article so you can read it. But I think they might have even made it premium already, which sucks. But, this is what happens if you have a premium subscription to Business Insider. But I think that you can read some of it. Yeah, you can read some of it. Anyways, I'll post a link to that. Thank you, Business Insider, for, even asking me for an interview. And really, we went back and forth so many times with the details. And the reporter was really cool. She wanted to get to the nitty gritty and the nuances. It's not a puff piece. Anyways, I'm closing in still on 7.5 million. Obviously, I had the $27,000 loss 2 weeks ago, which really, took the wind out of my sails. I'm trying to recover ever since. Now still up green on the year. I'm always trying to protect, even with my big loss. Had the best trade of the week, of the month, in several weeks for me. On MGOL, nailed the entry, nailed the exit. If you were in my challenge, you saw me do a live video lesson on it. Maybe, actually, I'll just embed that video. That video is for weekend subscribers, weekend newsletter subscribers only, which is a different newsletter because there's different rules, and I didn't want to get people confused. But at the same time, it's just such a good trade. And it's so rare that I nail the bottom and the top. A really good entry, really good exit, taking the meat of the move, good patience. Good setup all around. This is a trade that I'm going to be proud of for a very long time, even though it's still 1/10 of my big loss, which just shows you how off the rails I got with that big loss. When this is a really good trade and it's still only 1/10 of my big loss, I was so far gone. And that sucks, but I'll link the loss again too. I don't think you can ever really link your losses enough or talk about them, because that's the biggest risk with trading. And the only good thing about my $27,000 loss is that I've detailed it extensively for you to learn from. But let's talk about, the trends right now. Aside from my $2,000 gain on MGOL, I'm taking small gains, small losses on previous trades on WLDS, MGOL, MVIS, AITX, NRXP, MARK, WLDS. I'm trading all of these like AI related plays. That's basically the gist here. AI is still the hottest sector. MGOL is not necessarily AI. It's just Messi moving to Miami. That's, a one-time event where I still don't think a lot of people realize the ramifications of, the world's greatest, or arguably the world's greatest soccer player coming to, Miami. This is kind of like an inefficiency where America is really good at so many sports, like the best at so many sports, but we're so far behind in soccer, aka football. And Messi coming to the U.S. is going to bring his massive fan base. When he signed with Miami, also included in the deal are some perks with ownership of the franchise with Beckham, and deals with Adidas and Apple. And it's really kind of a game changer for soccer, aka football, in America. But let me just, aside from like the story there, in this video, I really want to go over what trends I see happening, because you do have to adapt to the trends. You can't just be like, oh, let me just buy all AI stocks and hold. You have to see what's working and what's not. So I'll link the video. I'll embed the video. I'm going to embed Jack Kellogg's video, my video analysis on MGOL, and then this video, I'm going to be talking about how to really adapt to what the patterns are telling us right now. And I'll start with MGOL, like watch that 10-minute video. I think it was 10 minutes. I was like fading while giving like a midnight webinar on Friday. My schedule was crazy. I'm actually going to see Jack and Lucas in the next few days too. Lucas, the short bear, he actually had a $2 million win on Friday. He trades big. Jack and him and I are meeting up soon. But MGOL, really good example of spiking on the news. If you caught the news right away, Stocks and Trade Breaking News alerted it. I missed it. I didn't want to chase. I got the dip right in here, and then I saw the rip. Buy the dip, sell the rip. Leave that comment underneath this video if you understand. Say, I promise to buy the dip and sell the rip. It's good when it rhymes. It makes it easy. And this video is specifically about like, wait a minute. We're in a market right now where, the NASDAQ is up, 25, 26%. The S&P 500 is up over 20%, off the low. So now technically it's a bull market. But you cannot get too aggressive. We're not back in 2020, 2021, where, you buy these morning spikes, you buy these afternoon spikes, and you just hold because they can go up 50, 100, 200%. Some are doing that, AHI, for example, but most, you got to sell the rip. In MGOL, I would have loved to hold this longer, but when you have a breakout over the previous high here, 256, and it only gets to like 270 before it has like some issues, that's not convincing. In the Business Insider article, one of the things that we talk about is like, I need convincing breakouts. It can't be too convincing, because if it spikes up too much, I got to take profits. There's kind of like the meat of the move and the meat of the spike. I want it to like break out. Like ideally, in a perfect world. So if you ask me like what would have gotten me to hold MGOL over the weekend, I still think the news is going to spread. But the price action wasn't good. If it, let's say it had gotten to 3, I would have taken profits, because, then I'm up 80 cents a share on a $2 stock, like nearly 40%. That's too good. If it had, let's say, broken out to like 275, 280, and then hung around in the 260s or 270s, I would give it time. Ideally what you want is these breakouts over the previous high, but then consolidating at higher levels. But that's not the trend right now. Even though the market's turning bullish, or has turned bullish, a lot of these spikes are failing. AITX, let's just bring a few up. AITX announced their robot AI dog. Big spike, big dip. Next day, got the press release, pre-market, double tapped 145 pre-market, couldn't sustain the momentum, and I was out in the 1.3s, and some people said, why not give it more time? When you fail to break out convincingly, whether it's a perfect double top, whether it's a slight breakout, I am out. Okay? Buy the dip, sell the rip. I didn't catch the bottom on AITX, I was buying like right in here at like 112 after it had already bounced 20%. So that wasn't a great entry, but my exit here on the double top was good in the 1.3s. A perfect trade would have been to get it here at 1 and sell it here. I mean, there's 40% of upside. I didn't get that. I had less. WLDS, same kind of lesson where, this one has been consolidating. You have this cool kind of augmented reality with your Apple Watch, but this one has always been tough, right? Like it spikes and then, it looks like it's holding, and then you get the breakout on Friday. They had a freaking AI press release pre-market. Like, look at our new AI-enabled, Apple Watch product. Breakout over several days. But what did it do? It failed. Okay, this is not a convincing breakout. And sure enough, some people were like, why am I not dip buying this? I'm not going to dip buy this aggressively because it's a failed breakout. I did try to dip buy it. This was my my trade on Friday. I lost like $30. So I'm not against totally, trying to say, okay, maybe the first breakout didn't work. Maybe it'll be a second breakout. But if it doesn't show signs of bouncing, I am out. I don't care whether I'm up 30 or lost 30. I guess I could have taken, I think it bounced to like 226. I could have taken 5 cents a share, but that wasn't my goal. Some people say, well, 5 cents a share profit is better than a loss, but I wasn't looking to make 5 cents a share. When it was up 5 cents a share, I wanted to give it time to see if it could bounce 10, 15, 20 cents a share. That was my goal. Didn't get it, so I simply cut losses. And this is a sign of the times. You can be in the right sector, you can have good news, you can have a technical breakout, but price action fails, you must respect the price action. And I'm glad I cut losses. I was buying on this dip right in here, and it just could not bounce for, this is 2 hours. And, you want to say, Tim, come on, give it more time. No. And you can see here what happened in the afternoon. When this morning spike failed and then the bounce failed, you have to cut losses or take small profits. You have to recognize what the stock is trying to tell you. AHI is a Friday short squeeze, and this one kept going and, kept going, but now even after hours, it's failing. So choppy on the way up. It was up like 1,000% here. But even here, like this is kind of a double top right in here. Like this is a convincing breakout, okay? Let me just give you examples so that you can see. There's a lot of failures, but a convincing breakout right here, like above 91 cents at 11 a.m. In hindsight, I should have taken this. I don't like midday breakouts. They're usually pretty choppy. This was not as choppy as most. I was surprised, frankly, that it went from 93 cents to $2 from 11 a.m. to 12 p.m. So this is a convincing breakout. And you can see here, it left the pre-market high and the morning spike high in the dust. Okay? So I'm not saying chase it at 2 or 190 or 180 or 170, but like, anywhere here, when it breaks out past 91, 92, buy it here in the low ones and understand the potential upside, especially on a heavily shorted name. And this is the thing, like, normally you say, well, Tim, like the breakout is convincing, but it's already up several 100%. There's no news. It's scary. But because this company doesn't have a history of big spikes and it's a Friday, shorts enter in too aggressively. I rip on shorts on Twitter. I rip on shorts in public. I rip on shorts privately. There's a lot of irresponsible, unprepared short sellers because they do win the majority of the time because these companies do crash and burn. But because of their win rate, because of their cockiness, they don't realize that it's such a crowded strategy. And I continue to believe that nobody who is a newbie, anywhere from less than 1 to 2 years of experience, none of you should be shorting. I know, they win the majority of the time. These pumps do crash, but you cannot predict how high they're going to go before they crash. And newbies are not experienced or knowledgeable enough to be prepared for these giant squeezes. Experienced short sellers are still losing big. Newbies are getting annihilated. Experienced short sellers have big accounts so they can, either, absorb a $10,000, $20,000 loss because they have a big account and they're like, oh, well, it's not working. Or they can even average up and, it's playing with fire, but a lot of the biggest shorts just keep averaging up and they try to outlast the squeeze. So whether you can, you can't lose big because you don't have the account size. You can't average up because you don't have the account size. You can't do really either because you don't have the know-how. Shorting is really, really dangerous. So AHI, I have no doubt, is going to crash in the future. But as a short seller, I wouldn't touch it. As a long, very great breakout here and a very great breakout here. 2 convincing breakouts in a row. Look at this. From 2 up to 3. And I don't like this too where like it gets halted for volatility, but there's a clear uptrend. 2 convincing breakouts. And then it gets choppy and now it looks like it's panicking and I wouldn't be surprised to see it drop 30, 40, 50% on Monday. So short squeeze stocks are not my ideal play. Some people say, well, Tim, this is a convincing breakout. Why not just buy this? This is nothing more than a short squeeze. For me, I prefer stocks with news. MGOL spiked on news here, but this breakout was not convincing. So this is the beauty of my $2,000 trade here. I didn't chase it. I should have bought it, but I wasn't quick enough. And then when I saw it up so much, I'm like, nope. I know this stock. It's very choppy. If you watch my video lessons last week, even before, I think I did, Friday morning, I did a video lesson pre-market. And I said, watch the key $2 a share level here on MGOL. $2 was resistance here. It was support here, resistance here. And then you get the breakout. So above $2 a share is still a positive. And when you have a breakout with news on a choppy stock, that's above a key inflection point like $2 a share, you have everything going for it, But again, news-wise, pattern-wise, everything is going for it, but price action was not convincing. And I didn't know that it was going to fail when I'm selling it here in the 260s. I didn't know it was going to go all the way back down to 217. No idea, And if you had held a gun to my head and said, what do you think it's going to do here at 260? I would have been like, I think it's going to be okay, 250, 260, 270, but I'm just getting out just to be safe. I did not know that it was going to be so choppy. But again, when it spiked up big here, I was surprised how quickly it came down. Like WLDS, I think that these companies are working maybe on like some toxic financings or something because they're spiking, or it's just a sign of the times, but they're spiking and they're not holding their gains for very long. So you have to recognize that. GFAI also spiked up here, tried to bounce a few times, couldn't hold the gains. What was it? APRN was another Friday spiker. Big spike. This is interesting. This is the same exact breakout over the midday highs in the afternoon, and it couldn't hold it. The high here was 977-ish. Here the high is 1030-ish. You have a 60-cent a share breakout. So theoretically, this is a good cup and handle. But what happened? It failed. So learn from these weak breakouts. Only AHI had convincing breakouts. APRN, the breakout failed. MGOL, the breakout failed. GROM was also a Friday spiker. This one too. Look at this. You have a spike high here from 36 to 44. Convincing breakout up to 54. But the breakout here is 55 to what? 58? Not convincing. And sure enough, it fails. So just between GROM, MGOL, and APRN, all 3 Friday spikers failed into the close, which is not normal. Like, when you're spiking into the close on a Friday, there's a chance that, there's no halts after hours. So there's a good chance that these stocks are going to spike huge after hours. So frankly, I'm shocked that GROM, APRN, and MGOL, all 3, like the high was right here. This was at like 3 p.m. on MGOL. APRN, the high was like 3:30-ish, 3:30 p.m. In GROM, the high was here at like 3:45 p.m. All 3 spiking into the close on a Friday. All 3 have breakouts over previous highs. All 3 failed. Learn from what is working and what is not working. That's why I want to do this video, because many people don't realize that like trends exist. And even though these are 3 separate companies and 3 separate industries, They all traded very similarly. And to ignore what's happening with the other spikers of the day is to lower your odds of success. So I just wanted to bring up this point. Leave a comment underneath this video. Say, I will buy the dip and sell the rip. Do not overstay. AHI is an outlier. And even this one faded, by after hours end. You just can't overstay. You have to learn to, either cut losses quickly like I did on WLDS when it couldn't bounce, or lock in profits like I did on MGOL really perfectly. And I'm really proud of a good trade, a 20% plus win. God, sometimes, the big losses really screw with your mind, but they get you in check. And right now, my trading is in check. And I have to stay in check. And I have to, I have to say that to myself. I have to say that to you. It's such a slippery slope if you get undisciplined. So please leave a comment. I will buy the dip. I will sell the rip. Let's see who's paying attention. Also read this article on Business Insider, and I'll post a whole video recap sometime this week. And then also watch this video with Jack Kellogg. Study hard!